Hello traders, this is Alexander from the Forex Authority and the FX Model software. Okay, let's have a look at the pound US dollar 15-minute chart. We'll see how the Forex Model produced this week, starting October 6th through to the end of October 10th. And we'll have a look at an exceptionally volatile week in the markets, and as per normal, the Forex Model proved to be a consistent winner. So let's go through the week and see how it worked. We're going to track all trades that occur from 2 a.m. through to 5 p.m. Eastern Standard Time, and I've broken that down into anyone who's trading in Europe and appreciates sleep. They'll trade from 2 a.m. to 12 p.m., and North American traders will trade from 6 a.m. to 5 p.m. So we'll track any of those trades and not anything that occurs in the Asian session. So the first valid dot to fire off was this white counter trend dot. It occurred below candle action, therefore it signals a buy. And you purchased on this bar right here, on the next bar. And after 10 bars, the trade had gone nowhere. Employing the graceful exit method of getting out of a trade, if it doesn't go anywhere, you exited for a minus 20 pips. Then at 9 a.m. Eastern Standard Time, we had a sell with trend dot, and that appears above a candle, therefore it indicates a sell. Red dot is with the trend, so with this trend. And you went short at this point, exited on an opposite dot. So that was for 189 pips. And you did not stop and reverse on this particular dot because that was not a valid counter trend dot. Gray dots require a few extra steps, and we'll show you one of those as we move along here. So this was not a valid stop and reverse. And the last dot that occurred just before the end of the New York session was a super red dot, a sell with trend, and it also confirmed itself with the higher time frame trend. The 60-minute chart also was saying sell. And the trade went nowhere, and after 10 bars you exited for minus 19 pips. The first valid trade to occur after that was this super white dot on this bar right here at 1:15 a.m. However, it took 4 bars, so people in Europe were able to participate in that trade, and stops were placed above previous structure up here, and the market moved south, and you were able to exit on a stop and reverse on this white counter trend dot right here for 118 pips. The market moved immediately north all the way up until this white dot right here for 200 pips. And this white dot occurred at 10:30 a.m., which allowed North American traders to participate in the immediate sell-off yet again for 115 pips. And then there was another stop and reverse at 2:15 Eastern Standard Time, which North American traders participated in, and it went nowhere after 10 bars, and you exited at minus 22 pips for a great day there. And the first dot to fire after that, and this is the first time we've seen a reversal dot, a legitimate reversal dot, and this reversal dot fired off, allowed you to get into the market at a validation price of 74.55. The market went straight north, and an opposite dot did fire, and you can see that by these faint red dots right here. However, one of the rules of the Forex model is that if after 5 bars the market does not move through this price, in other words, it's not a valid trade, the dot will disappear, the little dots will remain, and you would move your stops to that validation price. And if market didn't do anything, you leave your stops there. So on the 6th bar, believe it or not, it actually did go through, and you would have been stopped out for a plus 36 pips. We had a valid counter trend dot appear after 1, 2, 3 tests at exactly the same level. Sure enough, the market moved north, and you exited this particular trade right here on this sell with trend dot right here at almost exactly the same level. It was exactly the same level as you went long. So you garnered 0 pips on that trade. And this sell with trend dot occurred at 9 a.m. on October 8th, and it went straight south, and you were able to exit on this opposite dot right here. and you would do a stop and reverse, and that trade totaled 140 pips. On this stop and reverse, after 10 bars, the market had moved nowhere, and you were able to exit on the close of the 10th bar for -4 pips. The first valid trade to occur after that was this super white dot, a counter trend dot, also saying a sell when you looked at the 60-minute chart. And after 10 bars, oh sorry, that's not true, you went short here, and you exited on this counter trend dot right here. It was not a valid stop and reverse dot, therefore you simply exit when this opposite dot fires right here for +5 pips. So short here, long here, you're out of the trade. And the next valid dot to occur was at the end of October 9th at 3 p.m. Eastern Standard Time, a sell with trend dot, which we were able to ride down all the way down until the MACD histogram. This is the first opportunity we've got a chance to see this. So you sold here, market went down. An opposite dot did fire, as you can see by these faint blue lines, which gave you the opportunity to, move your stops wherever the heck they were up there. You had the opportunity to move your stops down here. However, the market did not move up and go through that price. So your stops remained, and the market continued to move downwards. And we had a crossover on the MACD histogram. It crossed back over into the positive on this bar right here, and you would have exited on the close of that bar at 70.78 for 112 pips. And the next valid dot to occur after for the European traders was this red sell with trend dot, and that trade went nowhere after 10 bars, and you exited for a -90 pips. And the next valid dot was the super gray dot. So that dot right there, you entered the market short on this bar right here. So it was the first opportunity to get into the market was this short, which coincidentally also had a sell super white dot. And the market moved south, and you were able to exit on this white dot right here at 69.05 for an 89 pips. Rounding out the whole week, for European traders trading between 2 a.m. and 12 p.m. Eastern Standard Time, they garnered 786 pips, and North American traders trading between 7 a.m. and 5 p.m. Walked away with 601 pips. So a nice week in the pound, and the Forex model, once again, proved to be a consistent generator of pips. And I encourage you to have a look at the rest of the videos on the site and to contact the Forex Authority to purchase your copy today. On behalf of the Forex Authority, I'd like to thank you for watching this video. And I invite you to visit our website at www.forexauthority.com, where you can sign up for a live demo or our newsletter for more information.